JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of June 2021. So yep, welcome everyone guys. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which I believe you can find useful. If you go on the jfdbank.com and click on the research tab right there on the top, yep, it'll take you to this page which we update on a daily basis, so yep, feel free to check us out here. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. So basically what we have here is we had a good push to the upside. So basically the idea that I talked about last week, that in a way there could be still a chance for this one to move higher, especially if it continues to trade above this short-term upside support line taken from the low of the 13th of May. And as you can see, yep, we did make a move higher. But what I was also saying that basically keep your eyes on this downside line as well. This one's taken from the high of the 6th of April, and basically we need to see a nice clear push through that downside line in order to go for some higher levels. Now, in a way, still also what I said before, that a push above this 29,519 territory could strengthen the upside scenario, and yeah, potentially more buyers could join in. But I will start looking at already at the upside if we get a nice good move back above this downside line here, and then yeah, we'll take it from there. We'll go slowly, step by step, to the upside, and we'll see where this index could travel further. Could it actually travel towards the highest point of March, or maybe even towards the highest point of February? But as I said, for that we need to see it first. We need to see a break of this downside line. We need to see the daily candle staying above it, and then yep, if you want to be a little bit more on the cautious side, a push above the 29,519 territory could be ideal. For the downside, I would start looking at some lower levels if we get a drop below the 28,710 territory right here, and then yes, a nice good drop below this hurdle could open the door towards lower areas. So keep that in mind. But at the moment, guys, I mean, we're kind of stuck, I would say. So we can actually even take a bit of a neutral stand on this one and just wait for a violation of one of the lines here before considering the next short-term directional move. Now, Shanghai Composite, very quickly on this one. So yeah, it's still running. So the index is still open for another 54, 53 minutes, something like that. But as I've mentioned to you previously, that as long as this upside line, this short-term upside support line taken from the low the 11th of May continues to provide support, then there is still a good chance we could see Shanghai Composite pushing further north here. However, to be a little bit more on the careful side and the cautious side, well, again, a push above this barrier, and not only a push, a daily candle close above this barrier, the 36.26 territory, would be needed just to be a little bit more on the safe side, because such a move here would confirm a forthcoming higher high, and yep, potentially more buyers could join in, and then we could start aiming for the highest point of February, near the 3,732 territory, approximately around there. For the downside, what I need here is, now previously I talked about this 3,577, 78 zone, approximately around here. But now, to be honest, what I'm gonna look at here is the low of last week, near the 3,562 zone. A nice good drop below it may, open the door towards some lower levels, guys. But for now, we're not there yet. So for now, we're still balancing above the upside support line. So let's see if it can continue providing, or let's say not providing, but showing the direction, at least in the near term. The German index DAX. So we had a beautiful move here on Friday, and we've created a new all-time high on Friday, and we've pushed above the previous all-time high, which was around the 15,685 zone. We pushed above that, and we've hit a level right here near the let me just zoom in here a little bit. There we go. So we've hit the area around the 15,706 territory, approximately around there. And we started, then we kind of drifted back down. However, we remained above the previous all-time high. So if we take a look at the cash index right now, we'll see that the price actually corrected a little bit lower. Now, what I'll say here is that even if it drifts a little bit to the downside here, but stays somewhere above this little territory, excuse me, above this little territory, or even better, let me just bear with me one moment. Let me just draw this one on the chart. Or maybe if it stays somewhere above this upside line, I would say, then yes, there is still a good chance we could see a push higher. However, if it starts dropping lower and drops below this 15,568 territory and breaks this upside line, now this is where it could become a little bit more ugly for a few more buyers, and we could maybe see a larger correction to the downside. Now, I do understand that a lot of you are probably already hoping to see that correction to the downside, but so far we're kind of struggling to find a good signal. So I mean, at the moment we can only kind of try to capture these little throwbacks to the downside. So at the moment I would say it's a little bit tricky with the downside unless we start breaking these short-term tentative upside lines here, and then if we do that, then yes, of course we could consider maybe a bit of a larger correction to the downside. But at the moment, any kind of, like I said, any throwback here could be still classed as a temporary correction before another possible leg of buying, guys. So keep that in mind. Jumping into jumping into DXY here, and this was a very interesting moment here on Friday. Of course, we had the NFPs on Friday, and they came out slight disappointment comparing it to the forecast, initial forecast. And we saw the dollar kind of drifting back down here and falling back below the 21-day EMA and below this 90.23 territory. So what I would say now is probably to be a little bit more careful and keep your eyes on this hurdle, this 90.23 zone, together with the together with the 21-day EMA. If we climb back above it and stay above this area, then yes, I will consider maybe a possible move higher again towards the high of last week, initially near the 90.63 territory, or a little bit higher towards the 90.87 zone right here, and then we would take it from there. With the downside, well, I mean, first of all, we can get rid of this downside line. It has been violated. Now what I'm going to stick to here are some of the support and resistance levels, or mainly on the downside, the support level. So what I'm going to look at here is this level right here, the 89.68, that's the kind of an interesting part here, which the interesting level which continues to provide decent support. Also, I'll keep an eye on this little short-term upside line here, taken from the low of the 25th of May. So basically, in other words, if we get a break of this upside line and then we see a drop below this 89.68 territory, then yes, this is where I'll get comfortable a little bit more with the downside scenario. Now jumping into gold, and gold is correcting a little bit lower. The commodity is drifting back below this 1890 territory. Last week on Friday, I mean, it found it overshot that level, but then found found its refuge just slightly below that hurdle, and this is the result we're seeing right now. So basically, we failed to close above that hurdle, and now we're seeing this little correction to the downside. Now, the reason why I'm saying correction, because we're still trading above this upside line taken from the low, the 31st of March. So even if we drift a little bit lower here, then as long as this upside line stays intact, the trend, the near-term outlook, I would say, could remain to the upside. So keep that in mind. For the downside, what I need to see here is a drop below this 1852 territory right here, and then yes, lower levels could be met, guys. So keep that in mind. In case this commodity decides not to travel all the way lower here towards this 21-day EMA and starts reversing earlier, and for example, if it reverses from this inside swing low of the 28th of May, which is around the 1882 territory, approximately around here, then yes, keep your eyes on this 1890 zone, because then a nice good pop above it, could lead the precious metal back to the current highest point of June near the 1916 zone, and then we would take it from there, guys. Because if it climbs above it, then yes, this would confirm a forthcoming higher high, and more buyers could join in. But at the moment, we're drifting back down. Let's see if this move lower will be classed as a temporary correction. So far, it is. But if it starts declining heavily in here and breaks this upside line, then well, this is where some of the bulls should be worried a little bit. WTI Oil, so drifting back down here, and failed to, or should I say, maybe for now it's failing because the day has just started, the week has just started. So I would say it's now correcting a little bit lower. It's drifting, trying to move a little bit to the downside here, but for now I would say keep your eyes on some of these levels here. So for example, keep your eyes on the 70.54 zone. I talked about this level last week a lot. Basically, that's the low of the 11th of October of 2018. So I'm still kind of targeting that area, even though we're seeing a bit of weakness right now. But for example, if it drifts a little bit lower and stays somewhere above the 68 territory right here, which is marked near the highest point of March, then we could see a nice rebound here and a pushback up. So keep that in mind. If WTI oil drifts lower and drops below the 66.40 territory right here, now this is where it could become interesting for the sellers, as this could open the door to some lower levels. However, we would still need to be very careful, because we do have some upside lines here, like for example this tentative one, which could still provide support. So we cannot really exclude that for now. But again, if we drop below the 66.40 territory, this could result in a larger correction to the downside, because at the same time we would be placed below the 21-day EMA, and then of course we'll take it from there. Bitcoin Cash is currently resting on the 200-day EMA. So in a way, it's kind of still finding good support. However, given that the crypto was previously in this little symmetrical triangle pattern, it's this symmetrical triangle pattern, we will kind of class this maybe as a signal, as a sign that their further continuation to the downside could be possible. Now, the reason is because basically before entering the symmetrical triangle pattern, the prevailing trend was heavily to the downside, and basically this could be seen as a kind of a maybe a bearish pennant formation or something like that, basically because maybe we could class this as a nice pole here, and this triangle, of course, could be seen as a pennant, and yep, in these scenarios, of course, according to all the TA rules, yep, these patterns tend to break in the direction of the prevailing trend. Now, at the moment, although yes, there is a bit of indication for some further weakness, I would rather stay focused on this little area right here, this 618 territory, approximately around here, marked by the low of the 29th of May. So basically, and of course, I'll keep an eye on the 200-day EMA. If the 200-day EMA surrenders, and then we see the rate falling below the 618 zone, then, well, I mean, lower levels could be met. I'm not going to drag this one way too much to the downside. I would only aim for the 541 territory initially, and then for the 468 zone marked by the lowest point of May. For the upside, I need to see a push somewhere above this 735 zone, and then yep, we could start maybe looking at some higher levels. Maybe even then we would be placed already above the 21-day EMA, depending on how this is going to trade, of course, and yeah, potentially more buyers could join in. So keep that in mind. Ripple. So Ripple is yeah, it's kind of it's trying not to give up to the sellers here, or should I say the bulls are not trying not to give up here to the sellers and the to the bears, I mean, and you can see that the Ripple is still kind of hanging above this upside line, or should I say slightly hanging above this upside line, taken from the low, the 23rd of May. In a way, this little, if we examine this little pattern here from the from around the 20th of May or something like that, then we could see maybe a possibility of seeing an ascending triangle pattern, with the upper side of it being somewhere around this 1.0606 territory. Now, if that's the case, of course, according to all the TA rules, this could break to the upside and we could see a push higher north. I mean, we could first of all climb above this 21-day EMA, which could be seen as a positive, and then yes, more buyers could join in. However, similar story as with the Bitcoin Cash. I mean, let's see if this is not going to end up being some sort of a pennant, a bearish pennant formation, because basically the prevailing trend here was to the downside. And another thing here, we are kind of stuck here in this little triangle as well. So that's why I'm saying this, maybe this could be seen as maybe a bearish pennant, which could break to the downside here. So in that case, if we do see a violation of this lower side of the triangle, then certainly keep your eyes on some of the important support levels. Now, previously I talked about this 0.7910 zone, but to be honest, now I would look at this 0.8960 just to kind of try to not to miss out on this territory right here. So if you drop below this area here, the 0.8960, then this could open the door towards the 200-day EMA, which is around that 0.7910 zone. But if that gets cleared, then yes, certainly further declines could be possible, and then we'll aim for the lowest point of May near the 0.6520. Now, jumping into a few pairs very quickly, guys. So AUDJPY is stuck, but it's very, very exciting still. So basically, what it means here, we're stuck in a well, first of all, above this upside line, and from the even shorter term perspective, we're stuck below this downside resistance line taken from the high of the 10th of May. And in a way, I would say for now, I'll stay neutral. I'll keep an eye on these two lines, and I need to see a clear break through one of those in order to consider the next short-term directional move. Until then, I'm just kind of, like I said, observing this one, but as I said, I'm keeping a very, very close eye on this one. Oh, and by the way, in terms of AUDJPY, also keep your eyes on the whole kind of market sentiment, because if equities start suddenly drifting to the downside heavily, then, well, I mean, we could expect AUDJPY to fall lower. So basically, this pair is seen as somewhat of a as a risk monitoring tool. So yeah, keep that in mind. USD-CAD. So USD-CAD is quite interesting as well, because on Friday we had that pop above this downside line. So a lot of bulls were quite happy. However, as I mentioned to you previously before, that even if we get a break of that downside line, still a push above this 1.2142 territory is needed in order to go for some higher levels, because at the same time we would be already placed above the 21-day EMA, not to mention this downside line as well. And yep, more, like I said, more buyers could join in. Then we could aim for the high of the or should I say the highest point of May here near the 1.2352, and then we'll see what we can do after that. For the downside, let's put it this way. The downside scenario is still the, let's say, the more likely one, just because we are still trading below this downside line. And on Friday, we drifted back below this downside line. So basically, there's an indication that the bulls are not as strong yet, unless, like I said, unless something changes, and unless, let's say, for example, if oil starts drifting heavily to the downside, then, well, we could see USD-CAD pushing further north, well, not further, but pushing north, and yep, potentially attracting more buyers into the game. However, if oil continues to strengthen, and yep, and of course the dollar index will remain on the weaker side, then expect USD-CAD to drift south. But from here, from the technical side, I mean, I would say that in order to get a little bit more comfortable with the downside, a drop below this 1.2013 territory would be needed. GBPCHF, also an interesting one. So we're still kind of floating kind of above this upside line taken from the low of the 7th of May. So as you can see how nicely this upside line is providing support. Also from around middle of May, I kept talking about this level right here, the 1.2790, which so far continues to provide decent resistance. And look at this. I mean, last week we had that spike, a little spike here to the upside, and boom, exactly near this 1.2790 territory it found resistance and drifted back down. So at the moment, I will say that yes, I'm still waiting for for this break above this 1.2790 if I want to aim for the upside. But given that we're seeing a bit of a weakness here right now, so maybe a drop lower could be possible. However, at the moment, I would rather stick to the 1.2652 territory, and if we get a drop below that, then yes, we could consider maybe slightly lower levels, and then we'll, of course, we'll take it from there. GBPNZD. So GBPNZD is yep, drifting back down. So this is what I said to you guys last week when I was covering GBPNZD. So I said that yes, if we get a pop above this barrier, the 1.9610, or roughly actually 1.9609 zone. Yes, my next target will be this downside line together with the 1.9772 level right here, marked by the high of the 21st of May, or in other words, if I'm not mistaken, that's the highest point of May as well. So we managed to reach that area. That's a great result. And I said to you that if we want to continue aiming higher, we need to see that daily candle remaining above this barrier, above this 1.9772. But as you can see, We didn't. Instead we just kind of fooled around here and we broke this. We had a few small little false breakouts and we drifted back down. So now the big question here is, can we see GBPNZD sliding a little bit lower? For that, I would need to see a break of this this upside line taken from the low, the 27th of May, and then we'll take it from there, guys. So yep, for now, keep that in mind. If we, like I said, if we break this upside line, then yes, we could consider a bit of a move lower here. Now, jumping into EURGBP. So, EURGBP is, yes, it's flirting and it's teasing everyone, and it's especially the bears. So, last week I talked about this when I said to you, wait for that daily candle to stay below this hurdle, below the 0.85, 0.8582 zone. And yeah, we didn't. We again, we just kind of created a few false breakouts, and yep, a lot of probably sellers got taken out there, and yep, that's exactly the reason why I say wait for that daily candle to end below a certain level or above a certain level, and in order to consider the next short-term directional move. For here for example, although it looks a little bit more towards the bearish side, because first of all, let's say if we examine this little pattern here, we'll see that yes, the pair is forming somewhat of a descending triangle, but as I said, I'm still waiting for that daily candle to remain below the 0.8582 zone in order to aim for some higher levels. But instead, if this pair pushes through this downside line and pushes above the 21-day EMA, I'll aim for slightly higher levels. And finally, EURUSD. So yeah, we've remained below this hurdle, below the 1.2161. I spoke about this area last week. So now my big question, can we continue trading below this area? If we can, then yep, there is a possibility to see a move lower. But if it climbs back up here, to be honest, even if it travels back above the 21-day EMA, for me, the more comfortable level here, now previously I talked about this 1.2254-55 territory. Now that's the high of last week. Yes, I'll aim for that. I'll keep that in mind. If we climb above the high of last week, there could be some more upside in the works. But if you really want to be careful, then you can keep an eye on the highest point of May near the 1.2266, and then yes, this would confirm a break of that level would confirm a forthcoming higher high, and more buyers could join in. But at the moment, let's keep an eye on the 21-day EMA together with the 1.2161 zone. If that continues to provide resistance, another slide could be possible. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, guys. I really do. So thank you very much. So if you want to catch me later on, BenTrader's tea time as always, that's 12:30 GMT time. For now, have a wonderful trading day. Stay safe, and I'll see you later. Bye-bye.